morning all. How are we all doing? I was just checking my mic because my stupid computer went, your mic's not connected this morning. It's back. How are we doing? Morning, everybody. Can't see who's at the top there. Danny, Kennelly, David, John, Burke, Amy. How are we all doing? We've got a big gap on the DAX this morning, potentially for a open fill. The gap up is on the way to the gap. This market at the moment is, I've never seen it this gappy. It's crazy. So we've got this gap up here, this gap up here. We got that gap there. We got this massive gap from yesterday. And now we've got a gap down today. So we've got 1, 2, 3, 4 up gap targets. And now we've got a gap down target. So if we get a rally down in to fill this gap today at the open, that would be a beautiful long, because I think the market's going to come up and at least want to fill that one. And obviously we've got these little orphans back here from last week. So that would be perfect today to get a nice opening range breakout to the downside and then grab a long, stop under yesterday's low, or I mean stop under that low is obviously the tight area, or potentially just deeper stop basically to see if we get a turnaround. So see what price action does when we get down there today, if we get down there, that is. Morning you Mac, morning Monkey, it's time. JC, Virginia, Jerry, how are we doing? Getting my account ready. The open. Right, so let's start off with news. There was no news overnight of any interest. So just scanning through for the obvious Japanese comments. There we are. Japan's Finance Minister Suzuki, recent FX move have been abrupt and one-sided. We will take appropriate action if FX moves become excessive. So again, they are still talking every single day without fail. They release a press statement saying, if you guys do not stop dumping the yen, we will pump it. So again, this, as long as this continues, this yen squeeze, and we got a little bit more of a squeeze going on overnight, and yesterday a little bit more from the Swiss and from the CAD and other things, the more likely this is going to happen. It's just a ticking time bomb. The problem with it is you never know when it's coming. Literally, it'll be a case of I'll come on one session and go, there we go. And everybody will be sitting in like 15% profit. But anyway, not yet. We've had some news out of Europe, but nothing particularly exciting. ECB's Kazakh, I see rates being raised past July. So we know that. They forecast at least another 2 rate rises. So that's nothing new. We're in June. It's July next month. You're going up 1. You've said you're going to do it twice. So that's not rocket science, is it? What it's going to be, though, obviously, we don't know yet. So that's the overnight news. Today, we've got Lagarde suddenly crept in this morning. Wasn't there yesterday. So we got Lagarde speaking this morning again. She was speaking last night. Probably unlikely we'll get much out of that. I don't think the market's going to hang around for that this morning. And today's main news is the CPI. So we've got the inflation figures for the Canadian dollar coming out this afternoon. And then we've got consumer confidence half an hour after the market open. Always tricky to know what's going to happen with the open when you've got news 30 minutes afterwards. So New York might be a tricky one this afternoon, but we'll see. But yeah, CPI this afternoon for the Canadian dollar. So big moves potentially on the CAD, depending obviously what the results are. So we'll see what happens with those. So watch these gap fills today. We've got 3 minutes to the open. There is your 15-minute pre at the moment. This is obviously your 5-minute pre-candle. Break of that low. We've got to run down to these highs. That's obviously the gap, but anywhere down here, potentially, as a run down this morning. That's about it, really. Got a little bit of support potentially at 861. which is that propulsion gap. So basically that propulsion gap is that high there. So there's potentially a little bit of support we might find there, but that kind of move this morning, if we do get that, I think it's a good buy because we've got these gap fills to do. So we will see. Morning, Jerry. Morning, Steve. So FX wise, ADRs today, the only ADR we've got is the New Zealand dollar Swiss. We'll have a look at quite a few of the pairs this morning. This New Zealand dollar Swiss is not an ADR if you've got it lit up on yours. Look at it. This is the broker being an absolute knob. There's the close. Yeah. So for the first 15 minutes of the market open, the broker decided to move the market 35 pips, which 46 is ADR. Yeah. So 3/4 of an ADR in 15 minutes. They moved this when the market was pretty much shut. So that's not an ADR. That's just a broker candle. So you can't quite see it, but that's the broker candle. Yeah. You can do. Joys of having a broker. So there's no ADRs today. RSIs are flat, CAD Yen. So what I'm going to do this morning is I'm going to whiz through all the pairs and we'll have a look at everything and have a look at what's going on, see if anything's coming up to decent support resistance levels, and just basically do a little bit of analysis on every pair, just every currency, because the market is flat at the moment. It's in either a gradual squeeze, as we're seeing with the yen here, or it's just flat and we're having these big wide ranges. All these big wide ranges are lovely because they're all just banking, but it's the squeezes which are just a nightmare at the moment. They're all undoing, obviously, eventually, like the Aussie New Zealand, which I got out of like 6 years too early, but that's what I do. So that gap fill's done now. I'm long on it now. So, but yeah, we'll see. We'll have a look through everything this morning. Right, we've got 1 minute to the open on the DAX. So you can see the DAX there. Basically, we're sitting up at yesterday's high at the minute, which is there, this blue dotted line. So basically, we just opened at the high. We've got that propulsion area potentially as a target. And then we've got, obviously, the gap fill down there. So that's the open. If anybody's got any specific pairs they want to look at in any more detail, let me know, but I will go through everything this morning because it'll be interesting just to have a whiz through, really, and see where we are at with everything, because these yens are getting on everybody's nerves. Okay, 10 seconds to go. So the pre-market 15 is actually closing on the lows, so won't be taking that on this account. So you saw that slippage there. You would have got slipped on that. You wouldn't have got that entry. You would have got slipped down to somewhere around there if you were trying to take that 5 minute or 15 minute pre-market today. So there's the low broken. Yeah, 5 pip slippage. A lot. So my entry's down here, 870. So it's quite a bit of slippage, that. It's a problem. 7 pips. Is that 7? So that's the trouble with this pre-market when it's closing here. This is why this version of the EA that I'm testing is not taking these, because that candle closed on the low. So as soon as the 5 minute open goes and that initial dump of the opening cash balance goes in, you're never going to get what you get in a backtest. So there's no point in paying any attention to backtest results. You've got to filter them out. You've got to stop them appearing in the results, which is what that new backtest I've done with this version. And it just shows that it's just not profitable taking these if they are closing on the lows. Sometimes you'll get them because it will just go like that, as this one is at the moment this morning, thankfully. But when they don't, you're just going to get taken out with a much bigger loss than you were anticipating, because the slippage will go in and your stop will go in the same place and you'll be in trouble. Okay, a bit of a lackluster open this morning. We haven't touched the highs yet. Okay, so 2 minutes in, no real direction. So there's your 5-minute opening range at the moment. Fairly tight opening range. So that's a really nice opening range to take today if we stay sort of around about that size, regardless of which direction it decides to go. Get a nice little tight stop on that, which will be profitable if it works. So we'll come back to that in a sec. See where that goes. Right, let's start at the top. Morning outro. So yeah, so ADRs, obviously we've got nothing. RSIs, the only thing we've got extended on RSI is the CAD yen at the moment, which is extended above the 4-hour, above the 70 level. As you can see, this thing is just screaming up continuously at the moment, this yen. So let's do all the yens first, basically, while we're looking at the CAD yen. So obviously we've had more shots across the bow from Japan overnight saying that they are going to intervene if the FX market continues to devalue the yen, which it is. So all the time this is making new highs, they are getting closer and closer to pressing that button, basically. Just buy up a load of yen and just drive this thing down, drive everything down against the yen. So if the market does continue to push today, they've come out openly and said they're not looking at a specific level on any particular currency. They're just not interested in these kind of movements, these big, strong moves against the yen. So if we get any more of that, that's when they're going to intervene, I think, at some point soon. So it's just a case of not when, it's the type of movement, or what, not when, but not what level we need to get to on any particular currency. It's the type of movement that we experience, I think, is what they're saying they're interested in intervening with at the moment. So as we continue on these rallies, obviously, the banks are building higher and higher P&Ls on yen positions. So what we're going to find is they will be having orders ready to execute, kind of like trailing stops, if you like. They'll have orders ready to execute as they see any kind of pressure starting to come in. So what you tend to get is this accelerated push down and then a pullback. And if that pullback doesn't continue, obviously they go, right, continue buying it. That sort of movement. So we're not getting the M pattern completing market structure down for the next leg. That's the best we've had so far on the CAD yen, for example. So as soon as we get to a certain level, you'll find a load of their orders will probably trigger, and that will create a large candle. When that starts, we'll get that big, strong push straight back down again. So if you look at all of these, Aussie yen has obviously started to move. So Aussie yen actually is probably the only one that has actually managed to get another leg down, because we've had that Australian dollar weakness. But even with the Australian dollar weakness, still managing to gain against the yen, as you can see. So that's one starting to roll over fairly nicely. CAD yen is still going strong. The US dollar yen was going strong yesterday. So far today, it's not managed to make new highs. So that is starting to come down. The euro yen just about to make new highs on the day. So yesterday it looked like we were starting the move, and then they pulled it straight back up again. So all this stuff yesterday, like a few people said yesterday, you know, it looks like it's starting, and they undid the whole lot literally in one session. So we then started, sorry, that was day before. They then started to look like we were going to get that next leg down, and they pulled it straight back up again. So now we're out the highs again, new highs. So again, it's just pressing the buttons of the Japanese, like poking them until they go, right, no more. So they will continue to push as long as they can continue to push, and then they will just get stopped. So ticking time bomb, basically, waiting on all the ends. So if you've got shorts on, obviously hold them. If you've got any longs on, just make sure you've got a stop that's fairly tight, because you're going to get slipped on your stop if there is an intervention. You won't get it honoured. It'll be a black swan event, basically, so you're not going to get honoured on it. But if you're looking to get into any shorts, just kind of pick one and make sure you scale in slowly on them. Don't get in too far and too tight. So looking at the US dollar yen as a gauge, which is what the Japanese typically have used in the past, the last intervention level we had was 150. Big round numbers tend to be the targets. So the 150 level is there. Yeah, that was the initial shot across the bow, which happened at 145. So 145, after saying, we're going to intervene if you don't stop doing it. We're going to intervene if you don't stop doing it. They shot across the bow at 145, round number. Then the market made a new high. They carried on saying it again. Then we got the 150. At the moment, we're sitting at 143. That was the previous level that they did it at. They've said and indicated that there isn't a level that they're going to do it at, which is fine. But you've got to watch that 145 because we're really close to it. And it's only 1.5 ADR away from where we are at the moment. Yeah. So it's within reach at the minute. So where we are right now, they're back up to 145 is basically 175 ADR. So it's 1 3/4 ADR away from where we are. So it's within reach within this week. Look at the news catalysts we've got coming up this week. Canadian dollar today and consumer confidence. If we get a higher than expected inflation figure on the CAD is likely to rally, which will drag the US with it. So that will give it a little bit of a push against the yen. Tomorrow, we've got Ueda speaking, in the afternoon. I'm pretty sure there'll be something coming out in there that says we're not happy about the FX rates, etc., etc. This lot will all be thrashing it out tomorrow anyway. Other than that, there's no US dollar until the GDP figures on Thursday. So there's no catalysts coming up for the US dollar that I would expect to really rally the US dollar unless we get massive inflation figures on the Canadian today. And obviously, if consumer confidence comes out as massively bullish, but that's highly unlikely, I think. And the market doesn't pay much attention to that. So we're really in the hands of the Japanese at the minute. If it continues to push, it could be tomorrow, could be this afternoon, could be this week. They may not do it at all. We don't know. But as long as they keep saying it, the market will be jittery and not want to rally. However, if you've got something that is pushing, for example, like we saw the Swiss franc yesterday, having a bit of a rally, there's nothing you can do about it. If the euro, like the euro today, the euro is having a bit of a rally at the moment. In the last hour, it's had a little bit of a bullish open. If the euro is going to rally and the yen's not going to fight back, we are just going to fly, aren't we? So it's across the board. We're just going to need to watch them all. So there's all your yens. We know the situation with the yens. They are being squeezed to death by everybody. And we're just waiting for something to explode. If it doesn't explode, the market will just basically start to rally back down. And it will just basically do its own profit take, which is fine. That's what they want, what the Japanese want. They want the market just to ease off, do a profit take move. Yeah, you've got a load of money in the bank. Take it. What they're saying, basically. And if you don't take it, we'll make you take it. So we'll see. The Aussies coming down very hard. We've just got the bounce down at the lows on the Aussie dollar CAD. So that was a 4-hour RSI extension yesterday. We got a nice hammer put in at support and we've broken back above support. So remember yesterday I was saying this looks like it's an A-shaped recovery, which obviously was. Watch for a bounce here and a pullback. So this is the bounce starting and the pullback How far we're going to get will depend on the Canadian dollar today. So the Aussie dollar, obviously, we know is very weak now. We had that rally that the Aussie got off the back of the New Zealand dollar weakness, and then the Aussie dollar got its interest rate rise and the market rallied off the back of that. So it had double bubble push and it smashed everything. They got out of all of that in 1 week. So again, I talk about this a lot in here, and you'll hear me say it all the time. We climb up the elevator shaft. Could climb up the elevator shaft. It'd probably hurt your hands, but you climb up the stairs, which took 3 weeks, and you fall down the elevator shaft, which took a week. Sorry, a month. Sorry, a week. Yes, these are weeks. Well, I'm don't know what time frame I'm on. 4 hour. These are weeks. So yeah, 3 weeks up, 1 week down. Yeah, that's basically what tends to happen with most things. When you get a profit take move, they tend to be a lot faster than it is the climb, because that's just what happens. We are affected by gravity, and we just do that. It's just the market thing. So now we will start that climb again, back up, and we will look at how far that is going to go. And on a profit take move of that size, you're looking at somewhere around about 38, which is in this propulsion gap here, as being a shallow pullback if we're going to start a new leg to the downside. If it's going to be a medium pullback, you're looking 50, 61.8 to 71.9 is your deep pullback. If it's going to flag, we'd only be looking to get to 23. Flag break. So there's only 2 positions on this at the moment. Didn't manage to get a third on down here. Average is all the way up there. So looking for a 38 retracement at least on it, really. But I'm just going to adjust the TPs on this. At that 50 level. So that'll basically be that one. We'll get out flat on the first position. So yeah, so that's Aussie dollar CAD. Aussie dollar Swiss coming down very nicely. Swiss franc had a little bit of a rally yesterday, but again, this is coming out of an RSI extension. So your entry would have been down there and out if you try playing the 80s, obviously 80-20s. So 80-20 seems to be the best at the moment. Obviously, you didn't get anything there. You might have got out on that. You would have got out on that. You would have had enough to get out on that, just depending on where your positions were. But if not, you obviously got in there, got in there, got in there, got in somewhere up there, and you're out now. So so there's your W pattern. Pulling back. Again, we don't know if this Australian dollar weakness is going to continue or not. Morning, Stefan. Or whether this is a pullback long. So there's 2 things at play here. We're either peak formation low, high, higher low, higher high, or we're in a downtrend. So this is basically a pullback for a next leg down, in which case then you're just looking for that. So one of those is in play. We'll find out which one. Aussie dollar yen. No point talking about that one. So yeah, we've had a lovely pullback on this. As you can see, got out of some of the positions on the Aussie yen. Was looking for next leg down. Looked like it was starting. It is still pulling back. So we are still lower high on the Aussie yen, which is good. So we've got the high, the low, lower high, lower low. Looking for a lower high here for market structure to remain bearish. So dropping down today, M5, M15, wait for that reversal alert short for an entry. And then continuation leg down, possibly. Obviously, if the yen intervenes, you're not going to get a reverse alert because you'll be 300 ADR before you get the signal. But it doesn't matter. So you want to be positioned already, ready for the move to happen if it's going to. So that's Aussie yen. Aussie New Zealand we know about. That's coming down. It still looks like that's coming down. If you look at the New Zealand dollar at the moment, it's kind of choppy and sideways across the board. No real strength in it, no real weakness in it. So when you look at the Aussie New Zealand, that just shows you how weak this Australian dollar is off the back of that move. Yeah, they have been buying the Australian dollar for such a long time. Yeah, this is a month. Literally, they didn't do anything for a month but buy the Aussie dollar. So the profit take move is always in line with how big the initial move was. That's the elastic band theory. The bigger and longer the stretch, the faster and the bigger the snapback. Again, 1 week, 2 weeks, 3 weeks, 4 weeks, 1 week. 50% of the entire move in a week. That's what happens. Always happens. But you can never guarantee it. So this is where your ball size comes into it. Sorry, ladies, if you haven't got them. If you haven't got them, obviously you haven't got them. But how long you can hold on to it is really what it comes down to at the end of the day. If you can get out of a position, as I did there, where you've been stuck in it for weeks and you can get out of it and get yourself out with a 1% loss, for me, that's a win. Yes, I could have held it. There is a chance that that could have happened. There's also a chance that that could have just been a double bottom flag break high. And if that was the case, you're just going to be sitting in pain again for potentially another month. No point. Just get out, be done with it. And yes, that would have been lovely, but that is not guaranteed. That is a possibility as well, isn't it? So there's no advantage on Aussie or New Zealand. If we were looking at something like the pound, for example, you'd be thinking pound's going to rally. Aussie and New Zealand, you've got no clue, have you? So yeah, Aussie, New Zealand, that's ready for a buy. I'm in a buy on this already. It is starting to come back down again. There is a good chance that we're going to get the same as we saw in the Aussie CAD. We're going to get a V-shaped recovery. An A-shaped recovery. And if that is the case, that is the case. But as long as it comes down like that, I'm fine. If it comes down in a squeeze, I'm just going to get into a squeeze in the other direction. And I think if that happens, I'll probably then scrap the Aussie New Zealand, because this has been responsible for 2 squeezes in the last year. And you just get to the point where you're thinking, this isn't working at the moment. At some point in the future, it'll be absolutely fine. But the problem with any type of trading is you don't know which instrument is going to be doing what when. So you can't rule out everything just because you've had a bad experience with it. You've just got to get back on the horse and get back into it. So that is at the moment the low. That is potentially a 50% retracement, and that is what I'm expecting to happen next. If it goes for another leg down and wants to try and fill that gap, scaling, nothing you can do. So again, this is why we're not too worried about how we're getting. We're worried about what happens after we get in. It's either going to go to your target or it's not. If it's not, you deal with it, and then you wait for it to go to your target. So that's Aussie New Zealand, and Aussie US is doing the same thing. So that's having a nice rally at the moment. Trading stop put on that this morning. So we had a lovely big bull candle in Asia. Buy on there from the RSI extension on Friday. So there's the entry. That was the M15 reversal alert in there. We just had the hourly reverse alert going in. I'm targeting there, which is below these lows. Yeah, so if we're going to get a resistance bounce, that's where I would expect it to be, somewhere around there. So target is basically banging between these 2 propulsion gaps, which is within ADR today. So that's either going to hit TP or it's going to stop out. Either way, it's about 0.4% to 0.8%, to 0.7, sorry. No, it's not. It's 0.5% or 0.25%. Yeah, sorry. So yes, a 0.5% But that is also an ADR reversal. That's the reason I didn't put a massive target on it, because it's an ADR reversal. Obviously, with ADRs, quite often you're having a propulsion move causing the ADR. And as you're having a propulsion move, you're normally breaking support. And if you're targeting getting out of an ADR, you don't really want to get too greedy on it, which is why that's just a 0.5% target. But it's bigger than normal. Normally I'd go for a third on an ADR reversal. So that's Aussie US. Again, extended. We've got no idea what's going on with the US dollar at all. It's just confusing. So as you can see, we came out of a range on the Aussie US. Price discovery short, failed. Normally what you would expect is to come around and muck about in the range for a bit. This just flew through because the Aussie dollar. Price discovery to the high, failed. Back in the range. So basically we're back to where we were in March. Absolutely no change. And this is one of the reasons these markets are so frustrating at the minute. We've had really nice range bound activity for months. It's just been impossible not to bank money. Now what we've got is outside bars going in on the monthlies, and those are causing obviously multiple squeezes at the same time. So if you look at this on a monthly, yeah, we're just painting these whacking great candles. So that range there, so Can't really see it very easily, but that's the high and low of that candle there. Then we got an outside bar. Then we got another outside bar. Now we're potentially putting in an outside bar, though this is going to be a higher high and a higher low. But look at the rejection. Yeah. So the market has gone through a state of expansion, which is incredibly difficult to predict direction on because there isn't any. It's just whipping up and down constantly, not giving any directional bias. So there's not a lot you can do with these. And you can see it very clearly on the 4-hour chart. This rate of expansion. Outside bars, incredibly difficult to target because what do you do after an outside bar? Potentially put another outside bar in. So all that's happening is the targets are getting wider and wider. So from here, it could go all the way up to there or all the way down to there if it's going to go low, go short or go long. Yeah. So the distance of a squeeze, if you're on the wrong side of it, exponentially gets bigger. Nothing you can do about it. They're just more difficult, more dangerous trading conditions. But equally, we could just sit back inside of this range and go, this is the area of balance we were happy to trade into for months. Price discovery failed. Price discovery failed. Okay, guys, let's carry on doing what we're doing. That happens. Happy days. We just constantly make money, which is fantastic. This is why I say 80% of the time the market is sitting in a state of mean reversion. Then it tries to trend, fails. Tries to trend, fails, comes back into a state of mean reversion. This is where we make our money, mean reversion. As long as the banks are pushing and profit taking and pushing and profit taking, you can't not make money. It's when they push and push and push, that's when you can't make money. Those are what you have to sit through and deal with and take the losses on every now and again. So at the minute, we're back where we started. I've got videos on YouTube, or a video on YouTube, where I talk about logical places to get into trades. If you're going to take trades, the logical places are extensions, because 80% of the time the market is in mean reversion. So if you take trades at extremes or beyond extremes, i.e. highs of ranges or outside of the highs of ranges, the chances of your trade working out faster are much, much, much higher than if you take it in the middle of a range. If you take a trade in the middle of the range, it can go against you by a massive distance or just move slowly against you. Those don't help. So if you take a trade here, then that range could hold and you could drop down, or you take a trade there and that could work. If it gets outside of that, it's going to be massively extended. That would work. This is why we use the RSI. Yeah. So looking for trades at areas of support resistance. Yeah. And looking for trades when the RSI is extended, when we know we've had a sustained push. That's what we do. At the minute, this is bang in the middle of nowhere, not extended. Nothing you can do with it. It was extended on the hourly, which is why there's a long position on it, obviously. So that's the hourly RSI extension on Friday. So that's your Aussies. So, you know, bias scorecard wise, I mean, no point looking at that. Might as well look at all of it. There is no advantage anywhere. Still. So the advantages that we're getting when we're getting these sells and the buys, don't forget these numbers go up to 14. So the highest buy we've got at the moment is a 6, the lowest is a 6. So and that is mainly because retail is offside on it. So these retail numbers obviously change on a daily basis. So there's nothing that's got a massive fundamental advantage in either direction at the moment. So everything is open game basically for trading in any direction you like. Sorry, I completely forgot about the ORB. Always watch, pay attention to what I'm doing. Okay. So point 2, is that right? $43. So there's your gap fill short. Underway. So your 5-minute ORB today is there. So you broke long, stopped out, broke short. So going for the gap fill. So not great today. There's not a lot of room on that ORB. So from there down to the gap fill, which I would kind of say I would watch that area really for the bounce today. You're looking at maybe 180, 1 hour return, not particularly good for room today. So that high, kind of 1 to 1.5 hour. If we get the proper gap fill, which is back down to there, that's a 2 hour short, which is fine. So stopped out on the long, flip short. If we get to 2 hour, happy days. If not, and it bounces from that level, tricky today, isn't it? But that's where I'd be looking for a buy. So certainly rejecting the previous session highs, isn't it, at the moment? See how that goes. We'll watch that as it unfolds. Morning, Brian. Morning, Astro. Or afternoon in your case. CADs and Swiss. Well, the CADs. So obviously, as you can see, CAD Swiss, again, just in a mess. We've got into a tight range over the last week, sort of sitting up in the 50% range of that initial range that we had before. Again, this one today, totally in the hands of the gods with inflation. So whatever the inflation figures come out for the CAD will drive this up or down. If it comes out as expected, probably just do that. It's rejecting those lows. It's going to be a whipsaw session by the looks of things. So yeah, not a lot we can really do with the CAD Swiss at the minute. It's just sitting sideways, completely flat on the RSIs. The 4 hour RSI, we had an entry back here, which was a couple of weeks ago, which played out beautifully, but that's it. There's nothing else going on the CAD Swiss. We are sideways. The Swiss franc should be strong, along with the euro. The Canadian dollar and the US dollar, pick a direction. Nobody knows what's going on with those two at the minute. Driven by oil and driven by interest rates and inflation, which the US is just far too weak on those figures at the moment. There's no interest in the market for the US dollar at the minute. We're having a little bit of a rally at the moment, but long term, they're not interested. So you have to say this is probably more of a short than a long from a fundamental perspective. But at the minute, it's not really doing much. So massive targets to the downside that are unfilled from all the way back here. So potentially, if we get negative inflation figures today, this could start its move. We've got Euro news coming up this week as well on Thursday, which is the CPI for Europe. So if we get the Euro CPI figures coming down and we get the Canadian dollar CPI figures coming up, obviously that is going to cause a big move to the downside. Why is this so whippy today? So just pull back inside of the 5-minute opening range. That's a big rejection of those lows. No real reason for that. Yeah, I mean, these highs haven't been tested yet. So this is kind of no man's land where we've just come out of. I wouldn't necessarily call that a decent long yet, but I think that's probably got a little bit more room to the downside. What happens? CAD yen, we've covered the yens and the Swiss yen. Euros. So euro basically is still a long, should be a long based on fundamentals. We've got 2 more interest rate rises coming. So at least, probably more, I would imagine. If the inflation figures are not coming down, that will put more pressure on them to increase the interest rates next month. So we should be seeing bullish price action on the euro odd. We should have seen bullish price action back here and here. We didn't. We got bearish. So it's not necessarily given that increasing interest rates at the moment is having a positive effect on currencies as we would normally expect. So everything is kind of very protracted in its movement, as you can see with the euro. So euro odd at the moment, extended to the upside, is starting to come down. So we can see we just had a reverse alert on the hourly. So the market structure is potentially starting to shift back down to the downside again. It is in a downtrend, obviously, at the moment, this one, but that as a lower high would mean that we're going to put in a new low. Fundamentals really are like that. So we should be looking for longs, in which case, if we get back down to this area, that'd be a perfect buy spot. But not necessarily happening at the minute, is it? So there's no extensions on it for any opportunities at the moment on the euro odd. Euro CAD, sideways mess, same thing. Look for lows and highs when we get back down to these lows down here, which is within ADR today. And we've got this level of support here at 125 ADR. That would be a perfect spot to be buying this one up. So if the Canadian dollar interest rates come out as positive, this is going to push down into this area. That's a lovely spot to buy. Yeah. So, sorry, inflation figures. They come out positive. That's where I'll be looking to buy it from. So somewhere between 100 ADR and 125 ADR is a good buy spot today. So that low and these previous double bottom lows down there. So 125 ADR. Euro Swiss sideways. Euro Swiss is always sideways. Its ADR is only 44. It's a tiny little pair. So yeah, take this any way you like at the moment. You can see on this one, the last few trades, it's such a good pair to trade. All these pairs are normally good to trade. The Euro Pound, the Euro Swiss, the US Dollar CAD, and normally the Aussie Dollar New Zealand Dollar are really easy. You know, look, extension, short it, out. Extension, buy it, out. In, out, same day. That's basically what you tend to get with this. So wait for the extensions. There's nothing more you can do with it. If we get up to these double tops, fantastic. We come out of propulsion here at this double bottom. Perfect. Yeah, so just wait for it to get to a level that makes logical sense. Wait for an extension on RSI at a level of resistance and just short. Or take a long back down there or down there. So monthly lows, propulsion gaps that you see any price action and drop down to M5, any reversal alerts that happen in propulsion gaps. Anything you can see basically on it, but at the moment this thing is just sideways. Slight bullish stance to it, but as you can see, you know, it doesn't matter which way you trade it. It's up, down, up, down, up, down. You're always going to get in and out of it. So just wait for an entry signal. Euro pound, same thing. Again, if you look at this one on the hourly, long, long, out, long, out. Yeah. Just waiting for those extensions to get in and out when you get them. There's an entry there. You can't see it. The RSI under my head, there was an entry there as well. Stuck sideways and has been for, well, since the beginning of the month, basically. So we created a range. We slightly dipped out the bottom of it, bit of price discovery, failed, back up into the range, bang in the middle of the range. No idea. Fundamentals are long and long. Could go either way. Euro yen we've covered. Okay, so we are getting a failure at the highs on the euro yen. So good looking little short opportunity if you need it up there. Euro New Zealand. Yeah, just sideways look. So since we had the New Zealand dollar news, we had the rally, got out of that short beautifully, took a long in there, that RSI extension, but literally sideways since the 25th of May. So wait, look for shorts up there, look for longs in those spots. You'll get an RSI extension when you're getting close to those levels. So waiting for RSI entries. Euro US dollar, currently got buys on this one. Again, trailing stop on this one this morning. So target I've got entered on that is just under 1%. Trailing stop is running at 0.5%. So that was the entry. RSI M5 reversal alert was there out of that propulsion. Ultimate target would be 150, but I'm targeting this little tiny propulsion gap. You can just about see it in there. But the reason I'm targeting there is because it's a previous high and it's below where the reversal alert happened, which could potentially act as a resistance as well. So, and it's also within ADR. So just looking for basically see if we can get a rally up to ADR. If we can't, I'm out because there's a potential for this to be a long flag. And if that happens, I just want to be out and locked in because it's bang up in the highs at 60 level RSI. It's just, you know, there was the short. This is the long. It's going to do that. Fine. I just don't really want to get into a squeeze on it. I won't get a squeeze on it, I wouldn't imagine, but just there's no point in not taking the profit. Pound odd, got shorts on this one at the moment. Pound had a nice big drop. So the Australian dollar had that little rally in Asia this morning, which seems to be getting undone at the moment. Target basically is that propulsion gap, which is within ADR. So just looking initially for that one entry from Friday, from the M5 reversal alert. Just looking for that short down into target there. But looking at it long term, the pound is bullish, as we know. So all the pound pairs, when we're looking at all the pound pairs, you've got to have a bullish stance on these. We've been told that 6.25 is going to be terminal. Well, at the moment, we've been told that 6.525 is the expected terminal rate and expected by the end of this year. So when you look at the fundamentals where we are at the moment, we've just had a 0.5% increase last week. Sorry, where are we? Pound, yeah. 0.5% increase last week. So we have got 0.75 coming this year, we know, in the next 6 months. So if we're going to continue at 0.25s, which is what we typically tend to do, we'd be looking at 1 month on, 1 month off, 1 month on, 1 month off, 1 month on, 1 month off. That's the end of the year, 6.25 being terminal rate. So they're making a lot of assumptions here. Assuming that happens, I think that is probably worst case scenario. Best case scenario is we're actually going to get higher interest rates. But if that is going to happen, we should be looking at the market moving up. Sorry, that's at 5, isn't it? 6.25. Was that there? Sorry, my maths is not adding up here, is it? 6.25 was terminal rate this year. Sorry, that's where I got that from. So 5.5 this year, 6.25 terminal rate early next year, February is what they were talking about. So going back to that, just to get it right. The 5 basically, we will be going up to 6.25 as terminal rate early next year. 5.75 by the end of this year. 5.5 is a given by November. We might be at 5.75 by the end of the year. So it's just basically interest rates are going up, making us attractive, and we will be the most attractive place for you to put your money, the pound. However, inflation is stubborn and not moving, and unemployment is starting to peter out and look like that's going to peak. There's absolutely nothing on the news in the UK at the moment about anything but interest rates. People's mortgages, like myself, who fixed 2 years ago when the interest rates were at 0.25, are sitting pretty on mortgages at 1.7%. People are now being offered between 6 to 8% if you've got a good credit rating. So you're coming out of 2-year fixed mortgages now this year, which is what typically people tend to do. I fix mine for 5. Most people tend to fix for 2. I kind of know what's going on because I got my finger on the pulse. So I was like, yeah, this is not going to stop. So I fixed for 5. Clever. But the people that didn't are now seeing their mortgages monthly increase by 2 to 4 times what they were paying. So the interest portion has gone from being 1.7% to 6 to 7%, 3 to 4 times higher. So we are getting this huge bubble, which is about to explode in the UK and in the US, where these interest rates have continuously gone up to a point where people now can't afford their mortgages. Other people are trying to get on the housing ladder. They can't get a mortgage because their cost that they are borrowing is too high based on their salaries. So it doesn't add up. So there's two things happening. People are switching over to interest-only mortgages. That's going to bail them out for 6 to 12 months. This is not stopping. Yeah, we're going to be at 6% interest rates for at least another 2 years. There's no way they're bringing them down. So that bubble, the only thing that can happen is the housing prices will come down. The market will crash, because for people to be able to continue to afford a mortgage, if prices are too high based on what people are earning, the only thing that can happen is prices of properties have to come down within the constraints where people can now get mortgages to get them. Yeah, which causes negative equity on people that have mortgaged for the first time in the last 2 years. So there's this spiral housing bubble which is about to burst in the UK. Nothing anyone can do about it. Government can't do anything about it. The banks can't do anything about it. If the banks don't increase the interest rates, inflation is going to go through the roof. We won't be able to afford a house anyway. So what's the point? Yeah, so it's all getting to this stage where within the UK, we started raising interest rates far too late. So did Europe. However, Europe is slightly better off with their inflation than we are. We've had the worst inflation. We've had the worst interest rate rises, and they've screwed it up royally with us, basically. So they are now left with no cards left to play but that. However, thankfully, what happens is when you do that, your currency becomes attractive and rises in value, which is great. So we have to look bullish. What we are seeing, however, is interest rate rises on things like the US dollar and the New Zealand dollar, causing not the positive effect that we would usually see, but a negative effect on the currency for some reason. Doesn't make sense logically. And the market has slowed. And this is why everybody's getting frustrated with this market at the moment. DAX gap fill is complete. Because the market is having to go into these kind of big, wide rangey situations because there isn't any logical reason to be a long-term investor in any particular currency at the moment, because the banks and central governments are all giving completely mixed messages about what we should be doing long term. They keep saying one thing and then changing it, saying one thing and then changing it. Things like wars keep kicking off. So at the minute, we're stuck in these big wide ranges. If you want to stay safe, you should really only buy dips in the pound pairs. However, if we are going to have a currency becoming the dominant, which is usually the US, there's a good chance that the pound could become the dominant currency, I think, moving forward over the next couple of years anyway, not long term, but over the next few years. You have that risk of you're never going to get back down to these levels to get entries. So on the 4 hour, for example, if we're looking at this goes back to November last year. You had one entry there and one entry there. That's it. Unless you're taking the 70, in which case you had a few others. But at the moment, I think getting this most stretched conditions possible is probably the right thing to do. But look at the peaks. Yeah. So trying to buy the pound, you had two opportunities. If you wanted to sell it, you had loads of opportunities. But what are you doing? You're selling against a trend. So they're risky. Every sell against a trend is risky. Trouble is you don't know a trend is actually started until you got into a trend. We've made a new high there. By the time you've got there, it's too late. You've taken 3 shorts. Yeah. So it's the danger of position trading is if you're getting it wrong from a fundamental perspective, obviously it can have a big impact on squeezes, because you need to be aware of when a squeeze is happening, which is the point behind the buyer's scorecard. But since I introduced the buyer's scorecard in January, we've pretty much been range bound on everything. So bad timing. So got to be looking for buys on it, really. If you're taking a sell, it is more risky. But as long as the market's going to move up and down and take profit, you should be able to get out of them. Just do not get greedy. Don't try and get into swings short, which are going to last for weeks. Unlikely. This one did. But if you look at the reason for that, it's because we had sustained buying since February. Yeah, that's the breather. But look at the pullback. It's tiny. It's a flag. Yeah, so it's still bullish. So all these pounds, pound CAD, Everything's still bullish. You're going to get the odd movement against the pound, obviously. If the Canadian dollar interest rates come out as negative, come out as positive, this thing's coming down. But it's only going to come down into support. That's where you want to be buying it up. So just look ideally for buys on all pound pairs, I think, at the moment. Unless anything catastrophic changes, there's so much going on. If NATO decide to get involved in Ukraine for any reason, if Putin gets toppled, decided to press a button, or there's all sorts of stuff that could happen. This could change, but for the moment, the fundamentals all point at us having the highest interest rates in the G8 moving forward, which should make the pound bullish. So buy the dips wherever you see them. If you want to trade, if you're scalping short term, M5, M15, just wait for support resistance bounces. So look at where, not pound yen, silly thing to look at. So look at obviously monthly and weekly support resistance levels and look for bounces off of them. Look for those reversal alerts at those levels and try and get in on those. And you can hold them as long as you like when you're going long, I think. Michael, fixed yours for 10 years, your mortgage. Good job. 10 years? I didn't get offered a 10-year fixed rate. I only got offered a 5. I don't think I would have taken a 10, though. Mind you, I probably would have. You don't get much lower than 0.25, do you? That was a good shout. Wish I had. I've got until January 2027, though. So as long as they sort this mess out by January 2027, I'll be all right. Nationwide, yeah. I'm at Halifax at the moment. I've been with Halifax for a long time, actually. They're always very, very good. Anyway, I'm not a mortgage advisor. I'm just saying who I'm with. Pound New Zealand. Again, we're not going anywhere on anything at the moment. But put a gun to my head, I'd much rather hit the buy button than the sell button. But you haven't had an opportunity in this. Look at this. I've had no trades on this since all month. There's not been one entry. Not been one signal. We just haven't had a signal. So stuck. Pound US. So the pound US is one of those again, it's bullish at the moment. There's no reason why it shouldn't remain bullish moving forward. So much rather be buying it than selling it. However, the US dollar will have those intermittent periods of strength where it will just suddenly strengthen up. And there's all sorts of things that strengthen it up. If you get movement south in the stock indexes, for example, the US dollar will rally. So there's things that control the US dollar. It's the world's currency. There's a lot that goes on with the US. It's very difficult. It's not just controlled by interest rates. So look for the 24.72 bounces, any RSI extensions to the downside towards those levels. Again, same old thing, support resistance levels, obvious levels of support resistance that we can take. Longs. The New Zealand dollar pairs, again, very, very awkward with these. We expected on the positive interest rate rise to get a bullish move. For some reason, we got an absolutely catastrophic failure in the New Zealand dollar, which caused some cascade effect. Absolutely no reason for it because they increased their interest rates. If you look at them fundamentally, we're sitting on 5.5. We had a 0.25% increase. So the pound is going to overtake. The US dollar is going to overtake. But you look at their inflation figures. Yes, they're not great. But they are coming down at a decent level. Their unemployment's frozen. There's no reason why you shouldn't have bought the New Zealand dollar. It's all good. However, the market, again, look at the market balance on it. There's no bullish sentiment. There's no bearish sentiment. It's just flat. So this thing just collapsed. It just, unfortunately, hasn't managed to recover since then. So resistance kicked in, 50% retracement. We're starting a second leg. We are looking like at the moment, if you look at these wicks on the 4 hour, they're absolutely beautiful. We are putting in a higher low. So we pushed down, rejected, buyer stepped in. We pushed down, attempted it again, buyer stepped in. We pushed up, made a new high. Sellers started to rally, buyers stepped in, pushed them back up again. Sellers had another go, Buyer stepped in, pushed back up again. We've made a new high. So this market structure is looking like we are just starting a new leg up on this against the Canadian dollar. However, we've got news on the Canadian dollar this afternoon at 1:30. So if we get this afternoon decent negative figures on the Canadian dollar, obviously that's going to weaken the CAD and give this New Zealand a little bit more of a rally. And then we probably will see this start to push back up again. So looks good, but again, no extensions, no opportunities to get into it. I haven't been in it this month. Yeah, last entry on this one was here. Straight in, straight out. I haven't had a trade on it at all. Market's just flat. It's just pancake-like. Again, New Zealand dollar Swiss. Look, it's coming down, yeah, but I mean, it's just up, down, up, down, up, down, up, down, chop, chop, chop. Sideways, flat. No reason to get into this in any direction at all at the moment. There's your New Zealand dollar retest on the interest rates. So we did manage to get a propulsion gap test on this one of the few that has against the New Zealand dollar. And the Swiss franc, as New Zealand dollar's coming down against Swiss franc, as the Swiss franc's had a little bit of a rally, but it's not nothing dramatic. New Zealand dollar yen, obviously we know about. New Zealand US sideways again since the 12th of June. Yeah, 2 weeks, literally stuck in a range, but not managed to get any signals apart from that short, which we got in, out, done straight away. Apart from that, not even had a signal on the hourly. Every single penny of everything has just been put into this yen move at the moment. It's just nothing else is getting any bites of the terrier at all, is it? So US dollar CAD again, small news events on the US dollar that are negative are just causing catastrophe. This thing is just so jittery at the minute. It doesn't matter what you say about the US dollar. If they came out tomorrow and said we're going to put the interest rates up by 1% over the next 6 months, you'd probably get a movement like that. And then they would have a something like the unemployment figures have gone up by 0.01% and it would collapse. It's literally that volatile at the moment with the US because they're so worried about the default. They're not putting any money anywhere near it. So we're struggling here because obviously the Canadian dollar is driven a lot by oil, and oil's had the odd rally over the last few weeks. As we know, we've been buying oil very effectively, and this thing's just collapsing. So it's uncharacteristic, put it that way. So we've got all these propulsion gap targets to the upside. I think what we're probably going to find is some kind of rounding bottom will form, and then it will start to gradually creep up again. So it's just going to do something like that on the inverse. We need a catalyst to drive it though. So CPI figures negative for Canada today would potentially kickstart that movement. We get decent consumer confidence coming through, and the GDP figures and unemployment is going in the right direction on Thursday. I think that could start the move. But if not, if we get negative figures here, I don't really hold out an awful lot of hope for the Canadian dollar. So the DAX, gap fill's complete. Propulsion gap's done, gap fill done. Bullish candle just gone in. So pause candle. We've obviously got a new higher low going in at the moment. We've got, this candle's brand new. So we've got 4.5 minutes on this candle. So see where this candle closes. We get a higher high and a higher low. That could be the breaks going on. And then start for that gap fill run to yesterday's gap. So target ADR to the upside. So see what this candle does though. If they break out the lows, obviously breaking out the low, the run is down to yesterday's low. We've got a propulsion gap in there, which is not just kind of part of a V-shaped move. So I would look at ADR or yesterday's lows if we are going to break out the low. We need to break out of this support here. So if we do get down to there, watch for a price action there. Then potentially you got a nice ADR run to the upside. All the US indices are kind of fairly stable at the moment. The Dow's had a little bit of a rally down, but NASDAQ and S&P. So this is just selling off in the DAX. It's not anything related to anything else at the moment. So yeah, US dollar CAD. I'm in longs on this at the moment. Again, it's one of those things, just no reason for the US dollar to collapse in the way that it's collapsed. So stuck in it at the moment, waiting for some kind of pullback. So the market's been shorting this now for, 3 weeks-ish? 2 weeks, 3 weeks? Waiting for the pullback. It will come at some point. US dollar Swiss. So US dollar Swiss is fairly sideways. Very nice thing to trade US dollar Swiss. It's one of those pairs, it very rarely catches you out on a squeeze, the US dollar Swiss, because the US dollar, obviously being the world's currency, has an awful lot of movement. The Swiss franc has big rallies which last an ADR or 2 ADRs on a regular basis, where there's money flowing through the Swiss franc on its way to other places. So you get these nice big swings in it. So you get lots of opportunities to get into it. So there's a short there off that RSI. There was a long there off of that one. There was a long there off of that one. That's all. So there's been 3 trades on this in the last month, all one shot, one kill, straight in, straight out. Brilliant. So at the minute though, we're just sideways, as you can see, for the last week. Yep, since we had this big, strong push down, they filled all the propulsion gaps to the upside. There are no propulsion gaps anywhere near. Downside target there is at the minute, and it's just rolling over. So potentially be looking for that last month's low. Or that's not last month's low, that is the previous month's high, I think. No, it's 2 months ago's low, sorry. Oh yeah, it's range bound. So that area there, or that area there. So this is your support zone. Potentially back up from there. But right now, middle of nowhere, nothing you can do. And US dollar yen we've looked at. Oil. Let's just see what that's doing actually, US dollar yen. See if we're getting a rejection this morning. Yeah, so it's not rallying for the highs. So Friday's high holding on the US dollar yen at the minute. Zero movement yesterday, just didn't, literally opened there, closed there. Nothing. Oil. So we got that bounce we looked at on yesterday, we looked at on Friday. Absolutely nothing yesterday, complete sideways movement. So far today, we're not going anywhere either. You're bang in the middle of the range. So that's obviously the range low where we took the long. Sorry, took the long. Lower highs going in. So looking for somewhere there. Where it goes from there, obviously, we don't know. But bang in the middle of nowhere. Well, and gold obviously isn't going anywhere at the moment because the US dollar is not going anywhere at the moment. So we are just holding these lows here at the bottom of this range. So it's a sell, but ever so gradual at the moment as a sell. So you're not going to get many entries on this, I don't think, if from a position trading perspective. If you're position trading it, obviously if you're scalping it on lower time frames, wait for the reversal alerts. You can pretty much take every reverse alert you get on this because it moves so wildly. Just literally get in on the reversal alert or the retest of the reverse alert, and then get out after a bit. It's just moving up and down all the time. So yes, trade it because it's too volatile. But go anywhere at once, can it? How are you able to view the gaps in your MT4? Well, my broker data doesn't show overnight data, basically. This is Robo Forex. They open the market at 7 a.m. Frankfurt opens at 8 a.m. So go and use, if you just get a demo account with Robo Forex if you want to see them. But most brokers, it varies a lot. Some brokers show pre-market data. And if that's the case, you can just draw lines basically at the close of yesterday and sort of 7 o'clock in the morning, and then kind of put the gap in yourself. Lagarde is speaking at the moment. She's just talking up the euro with regards to inflation being too high. Quickly watch the euro US dollar while she's talking. So inflation in the euro area is too high. We've just had Kazakh talking as well. I'm not comfortable saving now. July is end of cycle, rate cycle. You mean saying, I think, don't you? I'm not comfortable saying now July is the end of the rate cycle. Of course it's not. Inflation must consistently undershoot 2% for rate cuts. Good luck with that. Currently, you're sitting on 6.1%. You see what I mean about the time periods we're talking here, yeah? We've been increasing interest rates for a long time now. Let's just go back and find... When was the last interest rate? Last week, wasn't it? So June 2022. So we're 1 year in, aren't we, basically? I've got a feeling the Swiss came out late, didn't they? Pound. So there's the 0.1. So December 2021, we went up to the 0.25, and then we started February 2022. So this is now pretty much 18 months. Sort of a year to 18 months, we've done nothing but increase interest rates pretty much every month or quarter, depending on how the bank's doing it, which individual banks do it differently. But we're now a year in. And what we're seeing is these inflation figures just starting to top out and potentially starting to roll over and come down, yeah? So it's taken a year, 18 months to start that move. We then tend to get a hold in interest rates and fluctuation in inflation. And then we get inflationary pressure start to drop back down again. And when that inflationary pressure starts to get back down towards those targets, just before that happens, they will start to reduce interest rates. So if you think for something like the pound, we're not at terminal rate yet. We're not even close to terminal rate yet. So we've got another 6 months of that. So it's 2 years to go from 0.1 up to 6.25%, which is the forecast at the moment, the forecast terminal rate. We've had 15s, we've had 10s, we've had all sorts of stuff in the past. So that's, at the moment, best case scenario. Worst case scenario, way above. So that's going to take 2 years to get there. Then we're going to have a little bit of a pause and then a reduction. So realistically, you're talking about your mortgage coming down. Probably 3 to 5 years, you will start to see your mortgage start to decrease. Until then, it's pain all the way. So if you think at the moment, people are talking about their mortgages going up by a third to, well, between, a third going up 3 or 4 times what they were paying. This is going to be here for 3 years. When you start looking at that housing market bubble, if you think now we're starting to see people unable to afford mortgages, they're borrowing money on credit cards to pay their mortgages. Their landlords are putting their rents up by 50%. They have to leave their houses. This thing is just about to explode. We haven't even seen the start of this. And these rates are going to continue to go up. So people like Michael, who have fixed their mortgage for 10 years, probably survive it. People like me, who have fixed for 5 years, in 2027, I'll be lucky if we are coming down, I think. I reckon when I come down to remortgage, we'll be probably around about where we are here in 2027. Until then, it's a case of market will continue to buy everything that's forecast to go up and sell everything that's forecast to go down. At the moment, and this is why we're finding these issues where we're not really getting a lot of movement, which is great for us normally, apart from the squeezes. Is because you're not really going to stop this for the next 2 to 3 years. So we should see a fairly swingy market I think, moving forward for the next year or so, because you're not going to have these dropping anytime soon. And as the ECB have just sort of come out and said, until we undershoot that rate, yeah. So this is what Kazakh means by undershooting the rate, is that the projected forecasts are in a year's time, we will be sitting at 2%. Yeah. So we might be sitting at 3.75% when we say it. And in a year's time, if everything continues to go as it is, we'll be 2%. Then they'll look at the next quarter and go, right, now what's the projection? 2.6. Okay, we're not going to bring the interest rates down. What's the next projection? 2.3. Okay, we're not going to bring the interest rates down. Until we get a couple of projections that undershoot that level, ECB are not going to reduce those interest rates, which is just going to put pressure on everything economically. So there's no bullish or bearish advantage to anything moving forward that I can see at any point in the near future, because everybody is going to be sitting high, which means every currency is attractive. So the only way they're going to make themselves more attractive is by other means, yeah, trade deals, that sort of thing, agreements to reduce stuff, and there's other things that are going to start to drive this market, because interest rates are always the big driver, and that's what we've had for the last sort of year. This is now, and we've seen evidence of this over the last quarter, becoming what isn't driving the market now. You do not get interest rates rising and currencies collapsing. That's not normal. So the market is shifting away from interest rate change as being the main driver. However, when you have confirmed interest rate changes to a massive degree, like we have with the pound, that gives you a distinct advantage. And as you can see in the COT report on the pound, yeah, the market is positioned long. They're positioned long in the euro at the moment, but other things are starting to get a little bit more balanced. But the market's also long on the US dollar. Yeah. They always are long on the US dollar, though. This is the thing, because the US dollar is the world's currency, and it's, it does what the stock market does the vast majority of the time. It's always going to get stronger and stronger. However, that's starting to be replaced by China. Yeah, we're coming into interesting times, I think, from a fundamental perspective, but we will see. DAX is starting to give up the ghost a little bit. Not a lot of impact off of the Lagarde speech at the moment. Rates are to stay elevated for as long as necessary. Second phase of the inflation process is now starting to become stronger. Nothing else exciting coming out of there. Okay. So potential bounce point coming up. So we pushed up into that high, retested that high. Bounce, 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 bounce. So watch that level. If that level breaks, there's nothing else really. So it's a lookout below, basically. So watch the 158 round number. Or actually, it's 158.08. 158 is a bit. That's 158. That's the round number. So watch this area. Okay. I'll just put a buy stop above that high, basically. We're in an accumulation area balance from the end of yesterday's session. So the market was very happy to sit there and transact for ages. If we break out of that high, there's a good chance, I think, of getting a good run today. So I'm going to take a long on that. Right, that's everything covered. As I say, it's very difficult at the minute. Trading conditions are very hard because the market is in confusion at the minute. We don't know which way anything is going. So they're making decisions. They're squeezing lots of currencies at the same time. And we are getting a real lack of news that is making any impact. So that you look at the pound, for example, last week, we had inflation figures higher than expected. We then had interest rates increased. Yeah. Two massive shocks in the market for the pound that we were not expecting, that were not forecast. What have we done? Nothing. It's just not normal, is it? You don't get that type of news typically, as we had last week on the pound. Yeah, I mean, it's the where's it gone? Was it last week? Was it the week before? Am I going mad? Have I just gone for a time warp or something? Sorry, there we are. Yeah, so I must have gone on a week. So yeah, pound rates 8.7. We were forecasting an 8.4. Huge bullishness, because it means that the interest rates are going to go up by more than expected with a higher probability. The next day, they release the interest rates. 4.75 as a forecast. We get the 5. That is about as bullish as you can get for a currency that is already bullish. Yeah, total sideways, nothing. Not interested, is it? So what do you do when fundamentals stop driving the market? Flip a coin. Literally have nothing else to go with, have you? So the only thing I think you can use at the moment is support and resistance levels, which is basically what I do on a daily basis on the hourly charts anyway. On the funded account, is I look at support and resistance levels and wait for reversal alerts. That simple. Euro Swiss ADR. You have an ADR. Euro Swiss. So Euro's having a nice big rally. Out too soon as usual. So got out of that this morning. And it's still going. So ADR reversal opportunity on the Euro Swiss. So drop down M5. There's your reversal alert off of ADR. So just wait for a signal short, and you get in a nice little short position on that one. Actually, no, forget that. That's not an ADR. Look at that gap again. Brokers having an awful lot of fun overnight today. So that is 23 pips on the swap. Half an ADR. Again, half an ADR on the swap. Huge. So, yeah, I'd be careful. That's probably not an ADR. I would wait. So that is a propulsion gap on the higher time frame on a break of that low, which was London yesterday. So that propulsion gap, I'd wait until you get into there, because if that is going to be a high, low, lower high, that's where I'd sell it from. 125 ADR, which isn't really 125 ADR, but that'll be around about an ADR-ish. So look for a reversal alert in that area if you want to short Euro Swiss. Not extended, more of a scalp play, but kind of got to find scalp plays at the moment, because if stuff is going to go sideways a lot and not give any opportunities to get into mean reversions, it's going to be tricky. There's only 2 trades on this month, look. One there, one there. Obviously, 100% strike rate, but not a lot of opportunity. Morning, Potgator. If I haven't said morning already, that's a funny emoji you're using there. Anybody got anything else they want to discuss, look at, etc.? Because other than that, I haven't really got a lot. We're accumulating on the DAX. So watch for a break of that high. We've got the Price Action Toolkit. You can use the buy pending button, as I've just done over there. Nobody got anything else I want to look at? I suppose we haven't got anything else to look at, have we? Because I've covered everything else. So, can I recap on the new ORB? Well, there's not a lot to really recap on it because I'm just testing the logic and the execution at the moment. I've already done GU, Mick. Go back and have a look. There's nothing on it. It's sideways. So this is the testing that I did on the new version, which is not really, I shouldn't really call it a new version. It's a complete rewrite of the entire logic of the ORB strategy. So what it's doing is analyzing range sizes. So to see these are the test variables, as you can see here. It's analyzing range sizes to determine what works and what doesn't the majority of the time when the market is either too tight before the moves or the moves are too big. So I'm just trying to, the purpose of this version of the EA is to test whether there is an increased edge using distances of ranges. Because the original ORB works absolutely fine, but there's always room for improvement in everything. But the problem with trying to improve things is you quite often are looking for an increase in profit or an increase in strike rate that actually isn't repeatable over a longer term. So you might get something like this test is over a year. This year, it would have been better to use a 0.3 ADR stop. If you take that over a previous year, that would have returned 1.9 return on drawdown. So actually, it's not. So what I'm doing is trying to find if there is a common, if it's too tight before, don't take it. If it's too big before, don't take it. I'm just trying to find something that's common across multiple years to see if there is an advantage in having a range filter. And that's basically what this does. So this morning, as you can see, we probably can't see because the text is too small, but what it has done is at the open, it checked the range of the 5 minutes before the open. So that's the open. That was your 5 minute candle. So it checked the range of it. And the range was very, very small. So it said, okay, I'm not going to pay any attention to this 5 minute candle. So let's look at what the 10 minutes was beforehand. So there's the 5 minute candle before that. So it now takes that range and says, right, how big was that? That was 100. That's still too small. So then it goes, okay, we'll look at the 15 minutes before the open. And then what about that range? How about that range? Is that one a fairly decent range? That was 160. The minimum we were looking for was 132, which is 0.8 of an ADR. Yeah. And again, that figure has been come to through testing. That is the variance that was the most common across all testing. That seems to be the sweet spot. And the reason it's obviously ADR is it doesn't matter when you test it. If I test it in 1999, it's still 0.8 of an ADR. It doesn't matter what the ADR was, it's 0.8 of it. Yeah. So it basically said, yep, that's fine, brilliant. So the 15-minute range was the one it decided to use on the DAX today. So if you draw it out, that's the open. There's your 5 minute, your 10 minute and your 15 minute. So as you can see, the 15-minute range was a fairly decent size. So it said, yep, that's fine, we can take it. So that's part one of the test. Part two of the test is how close is the candle close to the bottom or the top of that range? And as the candle closed on that 15-minute range right at the bottom, I've done testing to see whether or not it, and this is live testing that I've done, to see whether or not you can get the orders on, because there's no point in back testing anything if you physically can't replicate it in real world. Yeah. So back testing is great for gathering data, but when you try and run things as we've seen in here, you don't get the same result. So today, the EA in back testing would have placed a pending order there, got into a position there and gone into profit. In reality, what I achieved was a 7 pip slippage, right? And a stop up there. So my stop is now that much bigger than I wanted it to be, which means that my loss is that much bigger than it should be. Can put that into monetary terms. If that's a $500 loss, that $500 loss has had 50% added onto it. So now it's a $750 loss. Yeah. So the rule is this too close to the low or the high of the range? Because we probably won't get the order on. In this case, it was at the low. So it said, screw it, not going to trade that today. And it says there, pre-market ranges all skipped. Conditions are not right. There's two conditions I'm testing. Then it waits and repeats the process. So it measures the 5-minute opening range candle. Is that within the distance that we want it to be? Yes, it is. So that was 210 and the minimum is 132, but the maximum is 0.2 of an ADR, which is in this case 331. Yeah. So that was lower than 331, higher than 132, which is the tiny one we tested. So we'll take a trade on that. So it places its pending orders at the high, pending orders at the low. We went long, we stopped out and flipped short. So we're now in profit on our short position. Yeah. So that's basically what it is testing and how it's testing it. And this is live testing it now to make sure that everything's triggering, the logic's working, and it all is. So now I know that that's working. My next step is to go back and do back testing, knowing that this is viable across multiple instruments and multiple date periods, to see if there is a confluence between a stop loss, a take profit, and a runner take profit. Yeah. And whether or not we should be deleting these pending orders on the other side when we get into a trade initially. So there's all sorts of testing that I'm doing, but the overall tests are very good. So we got like a 5% drawdown there, which is $7,000. We got a 42 grand return in the year. We got 5% drawdown there, 36 grand return, 3% drawdown, 16 grand. So it's all positive return on drawdowns. And obviously those ones with a 0.3, with a 3% drawdown, if you double your or triple your risk, that becomes a 9% drawdown, and that 16 becomes a 45k. Yeah. So it's just a case of making all of those drawdowns the same so that I can calculate those return on drawdowns the same and then backtest it. So that's what I'm doing. But if there's no edge, yeah, because I've got these return on drawdowns, I've got return on drawdowns between 3 and 5 with the normal ORB EA that's on the market now and working absolutely fine and being used. So unless I can get a higher return on drawdown, or it can reduce drawdown to make prop trading safer, there's no real advantage. So it's at the moment it is just a test. Whether it ever sees the light of day, I don't know. It's because if I release this as another thing, it's just doing pretty much what the other ORB EA already does. It's just doing it in a different way. But the results that you achieve with this will be pretty much the same as the other one. I'm not just going to release something to make money. I'm going to release something if there's actually, this is better, or, you know, there's an advantage to doing it, because I won't use it if it's not got any real advantage. The other problem I'm having is it's proving in backtests it's more profitable to use a 0.2 to 0.3 ADR stop. That's where it makes its better return on drawdowns. As you can see today, that's your opening range that was taken. That was the long that was taken. The stop loss was all the way down here. So the problem with it as well is, for those in the US, you get hedged a lot. Because you, as in this case here, we went long there. We came down, we went short there. If price pulls back up into mid-range, you're basically hedged long and short. But you won't have hit the stop losses. So for people in America, they can't even use it. They can't trade this way because they have FIFO rules and you can't hedge. You're in and out. So I'm still, so if that is the case, what I need to do is test whether or not, and what would have to happen is, when we go long, we cancel that pending off, because we can't take it. So we need to test whether or not that is viable. And when you look at the spreadsheet testing, this column here, delete pendings, all of the best results have delete pending 0. We get down to this one, all the way down here, delete pendings 1, which is a 2.1 return on drawdown. That is the first instance in that year's testing where it was actually beneficial to, when you take a long, delete the pending order short. But the whole purpose of the ORB EA, if you think about it, is we don't know whether the market's going long or short because we haven't got a crystal ball. We can't predict the future. So if it pops out the high like it has today and then rallies to the short, the people in America are going to miss the trade. And as we can see here, the return on drawdown is 50% lower if you do that. So I've got to think about all those sorts of things. And if there is no edge that is better than the ORB EA, yes, you can buy it if you wanted to buy it, if I put it on the market, but don't expect to get anything different. What you're going to do is trade the opening range in a different way to people that are using the opening range breakout EAs that exist at the moment. So you will just have something that's a little bit more intelligent, but it's not going to make any more money. It's just going to make the money in a different way. Yeah. So I'm not the sort of person that's just going to chuck on, here you go, here's 3 versions of the opening range breakout EA. Why don't you buy them all? There's no point. You're not going to make any more money out of it. So I will, but I'm not going to do that. So, but what I want to test is, and this is something I haven't even built logic yet into it, is using a stop loss that isn't ADR based. But the whole purpose of me building this was to test ADR based stops to see if there was an advantage. So I'm kind of going back to the old ORB if we just place it at the lows, aren't I? So, but there's other things I want to do to develop it. So if I can find the best settings there and there, so that it only takes trades where we're unlikely to get whipsawed because they drive you nuts. And then I can find a decent setting for here that produces a profit. What I then want to add is, okay, if this has all taken place, so we've either taken that range or both of them because we got whipsawed and then took that, are we in profit? No. Okay, so now I'm going to wait for inside bar break and add inside bar break to the EA so that if we have ended in a loss, so today at the moment we are sitting in a loss of 974 and we're sitting in a profit of 1873. So right now, if the market sits here and at 2 o'clock this afternoon, it either hasn't hit that TP, because when it hits that TP, it automatically break evens the second position. Again, that's another thing I was testing, which makes total sense. If that hits, you want to stop that loss. So if it hits that TP and then just hovers around here until 2 o'clock, the EA will auto close that at 2 o'clock, half an hour before the New York Open, because we want to be flat for the New York Open. If that is a profit, job done. That's the session over. If that is not a profit, it hits that and then it comes back to break even and we end up in a loss. I need to program in, what do we do next? So, for example, using things like previous day low bounce plays, using inside bar breakouts, other things that we can add to it. So I'm kind of trying to build something, build a model, if you like, of at the open, what is the best thing to do? But, okay, did it work today? Yes. Brilliant. Let's go and do something else. Did it work today? No. Okay. Now what should we do? Well, we need to wait and see what the market's going to do next, because what we thought it was going to do at the open, it didn't do. So now we need to analyze. So what are the conditions next that are the best thing to take? An inside bar breakout we know is very effective. So if we get into an accumulation like this, perfect example today, thanks Dax. So if we get into a situation where we're going into an accumulation, pending, when this accumulation breaks, we get in. Yeah, inside bar breaks. So we'll look for inside bar break entries. Yeah. So the next step of testing will be when we take an inside bar break, scrap all that, new test, inside bar breaks after the first half an hour or whatever. What are the best stops and TPs to use on inside bar breaks? Because we want to try and get our money back. And that's the next sort of step. Then, okay, so we didn't make money on the open because it didn't do what we wanted to. Now monitor yesterday's low. If we get within a distance of yesterday's low, monitor for a break of the highs. And if it pops down below it and closes back above it, go long. What's the best stop to use for that to get a 1.5 hour? Because all we're looking to do, if you think about it, is we're looking to get a trade that works. If we get an initial pre-market range and the candle closes within it, and that range is of a decent distance we know is profitable long term, we take the trade. If it gets down to a 1.5 hour, we close that position, bank that profit, move the second to break even, and if it comes back and takes us out of break even, we're done for the day. We've done it. We've made money. Yeah, if you're risking $500 on a trade on a 100K funded account, you've just made $750. What more do you want? $750 you just made. That's enough to pay the mortgage, isn't it? Right? So if that works, we're stopping. If that whipsaws and we go 2R down, we will take the 5-minute opening range. If the 5-minute opening range conditions work and we get that break and we get 1.5 bar, we're going to be less than what we've lost. So if that first one gets us back 3/4 of our losses, and then the second trade goes sideways until 2 o'clock and closes in a profit and we're profit for the day, we're done. We might have only made 300. Oh, well, we've only made 300 quid. So that's good. The best case scenario is we take the 15-minute pre, it goes bang, 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 TP1, bang, 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 TP2 at ADR. We bank $3,250, sit there and wait for payday, and we withdraw that money. That's the perfect case scenario. That happens regularly. If none of that happens, what do we do next? That's basically what I'm trying to build. It's just, I know how to trade the DAX. It's just a case of trying to get the automation in place to make sure that if a condition happens, we stop, because the thing that kills people is over trading, right? Sitting here right now, I have just lost 974 this morning. I'm sitting in an open PLL of 1980. I can hit the close button on these 3 orders now. Why is there a NASDAQ order in there in profit? That's from yesterday, sorry. Is there a NASDAQ running from yesterday? Oh, I closed the terminal down. Right. So again, this is something else to think about. That's when the closes of the NASDAQ. And what the EA will do is close it there. I shut the terminal down. Obviously, the EA wasn't running, so it hasn't bothered to do that. So that should be closed. But forget that. Let's close it now. But right now, we're sitting in 1100. So we lost 900. We've made 1100. Right now, I can close these 2 positions out and walk away with $200. If that's enough for you, you can set the EA up to do that. Just make $200. So there's logic I want to build in. If the pre-market range works and we have got a loss that we have just recovered, don't try and go for $750. Just take 300 and be happy with it. Yeah, so there's all sorts of logic you can test and build in to get that equity curve looking more like that, which is what I'm after with a prop system. Because what I'm getting with prop on this is a fantastic result long term. But that, yeah, we go, it's making money, but it's making money in a really difficult to stomach way. So it's just looking for the A1 setups. And if we don't get them, we don't take them. So this version of the EA is saying, is that range too tight? Yes, don't take it. Opening range candle goes in like that. Is that range too big? Yes, don't take it. Right, we'll trade the DAX tomorrow, because today it's just a bloody nightmare. Skip it, walk away, wait for the NASDAQ, the S&P and the Dow in the afternoon. Just don't trade it. But those conditions will calm down. So after the first half an hour, have we broken out that low or that high? Yes. Okay, brilliant. Well, let's start looking for inside bar breaks then. Because either we're going to retrace and go into rotation for the day, or we are actually going to get a rally. So let's look for inside bar breaks. So that logic can be built in as well. So I'm kind of trying to build the perfect trader, if you like, for all the conditions I know from experience that are profitable in the DAX. But taking yourself out of the equation means you're not going to go, oh, I've lost $400. Oh, that looks good. I'll buy that. Why? you've just broken your rule. Was it an inside bar break? No, but it looks good. Well, then why did you press the button? The odds are 50-50. If that one loses, now you've just thrown away that $200 loss you've made and made it a $950 loss. That's why you've blown your prop account. So trying to take that out of the equation. So I'm looking for what happens at the open, pre-market, what happens at the open with the initial cash balance. After those conditions are met, what happens next? If we hit ADR, let's look for an inside bar break reversal. If we hit yesterday's low, let's look for an inside bar break reversal. If we don't get anywhere near yesterday's low or ADR, just sit there and wait. So I'm just testing individually every single one of those conditions to put together an EA that logically moves through them and hopefully will come out with a nice equity curve. But the testing involved is immense because I have to test every condition, find the optimal ones, then out of sample test the optimal ones, then put them all together, because obviously you've got to bear in mind as well that every single one of these types of entry at different periods every day will have a different version of whether or not we continue to trade, because some days you might have an opening range break that just ends up with 10 cents in loss, and because it's ended up 10 cents in loss, it will take inside bars that all go wrong and lose $4,000. If that had ended up in plus 10 cents, those inside bars wouldn't have been taken, and all you'd end up with is a flat break-even day. And this is why I'm looking at the difference between entering with an entry there and a slippage entry. Is the difference between ending up with that 10 cents plus or 10 cents minus. That has a massive impact on every trade taken after it. You see, this is the intricacies of actually real testing like this. It takes absolutely ages. But you've got to do it, because there's no point in going, oh, I've pressed a button, I've run that, it's come out with a load of results, that's the best one, stick that on the chart. That's never going to happen again. That 5.58 that returned off of a 5.83% drawdown, 41 grand, never going to happen again. Those conditions are never going to reoccur in the market. You're going to get something different every time. So you've got to pick something in the middle of the bell curve that works across multiple out of sample tests, and then put that to one side. Now, what's the next step? Did we make money after that? So that's basically what I'm doing with it. But it's not going to be a fast thing. I've covered all the FX pairs, guys, already. I'll quickly whiz through those ones you've asked for, though. So GU, it's just sideways, hasn't gone anywhere for a week. Flip a coin. Take a reverse alert, drop down to M5. Should have gone short there. Should have gone long at the beginning of Asia. Just literally take a reverse alert and deal with it after. There's nothing else you can do with GU. It's stuck. Euro yen is obviously stuck. We are rallying again. Another scale out gone in. This euro yen and the Swiss yen are the two at the moment which are really rallying, because we've got a strong euro. And obviously that's rallying the Swiss franc as well. So if this continues to make new highs, as it is at the moment, yeah, this is what is causing Japan to shoot messages out saying, stop it. And if they keep doing this, they will stop it. So long may it continue. To be honest, with the yens at the moment, I've only got 2 yen positions on. This account has got multiple yen positions on. It's massively squeezed because it's over leveraged on the yen. It's going long 6 times on the yen, so obviously it's going to be in pain. But for me, I would love to see a 125 ADR on this today, just so that it really makes the Japanese go, right, that's enough. And hopefully we'll wake up to an Asia where they've put a strong move in, and that will scare the market off without them intervening. If they intervene, fine, I don't care. I'll wake up and it'll bank fortune, which is lovely. But all of these yens are in the same boat. If they keep pushing, they keep rallying, they will at some point get stung. Even the US yen's going for it again. So 145 on the US yen. is the initial intervention on the last time we had intervention, which was back in October. So they started the intervention in September, end of September. That was the first shot across the bow. Then October, they started the move and they triple tapped in November. So it happened over 3 months. We're waiting for the first. But all the time they keep pushing, it's going to come. So that 145 level was where the first intervention came. Look here. 144.6. Well, the high before the intervention was 144.960. So it's 145, isn't it? Which is 175 ADR today. So if we do a 150, 175 ADR push today on US dollar yen, i.e. Canadian dollar has good interest rate figures, inflation figures. We could do it. We might find it's this week. US dollar CAD. Yep, still stuck in this. This is one I am stuck in as well. 5 positions on. Just waiting really for some US dollar strength. Again, so I mean, from this point of view, I want the Canadian dollar to have weak figures today, so the US can take advantage. My average is 225 ADR. This is one that's is a contender for aggressive drawdown control at the moment, but I'm not seeing. If you look, I'm not seeing anything really that is sticking out as a. This is where I want to get aggressive. Apart from this level here, which I've got drawn on in this gold line. Yeah. So ADR today is that quadruple top resistance. Yeah. That was tested twice as support after they finally broke it and started the rally. So this will be the first retest of that level. And your RSI is kind of getting low, but you know, you can see there's divergence on this as well. Yeah, it's trying really hard, but there's just no follow through in the US dollar at the moment. So, but 5 positions on, waiting. No hourly RSI extension on anything. No, nothing. There's no RSIs on anything apart from the CAD yen. That's a 4 hour. Dead. Squeeze. It's just squeezy. This is the danger with when you've got conditions like this where there's no real advantage. When you know there's an advantage, you know there's a chance of a squeeze and a trend. When there's no advantage on anything, these squeezes and trends can come out of nowhere, and there's nothing to stop them either. If you think about it, there's literally nothing to stop this at all. The market is not happy with the US. We know it's not happy with the US. However, the market's not happy with the Canadian dollar. So why is the US so weak against the Canadian dollar? It's not as if the Canadian dollar is rallying off the back of oil prices. They're going sideways. Yeah, it's totally nonsensical from a fundamental perspective. And all the technical traders are going, yeah, fundamentals. Who pays attention to that? The banks, governments, institutions. But anyway, you're technical traders, so what do you know? But you know, at the moment, the fundamentals are not making sense. I agree. A technical trader says to me, that's because you're trading fundamentals. Well, I have to agree with you. Yeah, fundamentals are not making any sense at the moment. They're just not. But what can you do? You have to sit through them. Higher than usual squeezes. But saying that, I'm not in higher than usual squeeze on a normal account. If you're on an account where you're trading every single pair, yes, you're going to be in massive pain. But that's why I teach in the bootcamp and talk about it constantly. Exposure, and why the dashboard has exposure. If you do that, you will get hurt. And this is exactly why I wanted to show this every trade so that people can see it. You know, it's painful if you overexpose yourself. I think what I'm going to do with this account when these squeezes are over, I think what I'll probably do is reduce the leverage down by to 1/3 of normal. So instead of going in with 0.25%, I will go in with 0. I'll probably go in 0.1%. So that's kind of equivalent of a 0.3 risk. And let it continue to trade all three, because, and then I'm going to turn off the automatic drawdown control on 1 ADR, and I might stick it on 2 ADR basically. Just because what's happening with this account is it's hemorrhaging drawdown control at 3 times its normal rate. So the results look way worse than they are, because it's doing drawdown control not just on US dollar CAD once, or on the yen once, or twice rather, which is what it should be, but it's doing it 6 times. So you're seeing 3 times the losses that you would normally experience. So at the moment, I'm sitting in a 4.2% loss this month. It's going to be a losing month for me. I don't often have them, but I am this month. But I'm not sitting in 24% of drawdown, obviously. So I think I need to adjust it for this account, because obviously this is the account I'm going to show in the live room. So I need to make it a little bit more realistic. At some point I'll do that, but I'm waiting for these squeezes to be over, because what I don't want to do is change the EA now, because it will start doing all of the wrong lot sizing. Euro US dollars doing well today. So that trailer I've got on Euro US dollars holding. Okay, so we're down in that area. We've got the rejection on the DAX. So what I'm going to do is pending order above that high. If you want to get in now, I mean, it doesn't get much more of a signal than that. That's all the limit orders puked under the lows there. So that's a long from there. I won't take it on this account because this is trading the EA, but no, that's not actually. This one is. So then again, look, a normal human being now would be going, shutting those. I'm letting this run because I want to make sure that the logic plays out and it does everything it should do. Look at that for a TP miss as well. Look. See, because that TP hasn't triggered, it hasn't moved to break even. So that is literally that far away from taking a 4R loss. If you're watching that as a human being, you're not going to let that happen, are you? So, again, EAs are great, but you're not going to you're not going to let things like that run away. So yeah, so that's a good looking order. So pending order above that high. And stop under the low, give it some room, and then target gap fill from yesterday, which is 125 ADR now. So 100 to 125 of ADR. If you want to be safe, target that low, which is basically there. Oh, yesterday's high. So safe target to the upside. Yesterday's high, aggressive target, gap fill. Good looking shot today. And how's it going with prop firm? Yeah, fine, as usual. You're with Apex. You're trading futures. I'm not trading futures. I don't trade futures anymore. I do every now and again. Every now and again, I'll pick it up, and I usually pick up a futures account when somebody's got an offer on. Take Profit Traders, my new futures go-to account. They've got better trading conditions than Apex and better payout conditions than Apex, which is the important bit. Because in futures, you get hurt very quickly and also make money very quickly. So futures is too labor intensive for me. I love it, but I can't do it. I'm in here all the time. It's a pain in the backside. And the trading drawdown in futures is the killer. Very, very hard to get paid. Apex, you need to wait weeks to get paid. Oh, Brugum. I just passed my prop firm evaluation. With phase 1 and phase 2, the EA was running with no problems. As soon as I received my new login details on the live account, the EA does not take any trades. Uninstalled MT4 and also installed everything again. Da, 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 da. Looked in the journal at the bottom left. There is yellow triangles. That's not very helpful. Anyway, that's good. So someone's passed with the market reversal alert CA. There you go. He's using the market reversal alert CA. I'll be using the ORB EA if I was trading prop. So that's not triggered and not hold either. So entry is going to be there. So looking for basically any kind of inside bar movement in this area. But if this breaks, I think there's a good chance that we're coming down to test yesterday's low. So again, this is the sort of thing I'm testing on the EA, on the new version of the EA, or will be testing. You know, if you've got a pending order there, right, and it invalidates it, it's gone. That's it. We stop. Get rid of it. So you need an invalidation point. And then we just sit and wait. And if it doesn't get down to there by like 1 o'clock this afternoon, so it's got a good, you know, hour or so to get into a trade and get a trade underway by the time the New York opens, that's it. We're done for the day. We just don't trade it. So anywho, I'll let you get on. It's 9:52. So I will be back this afternoon at 2:20 for the New York session. Anything you need, let me know. I'll be in Telegram and we'll see how we get on with New York this afternoon. But we have got that news coming out at 3 o'clock this afternoon. So we might find we get a little bit of a quiet open. So we'll see, 3 o'clock. But 1:30 as well. So if we do get a massive result on those Canadian figures, we might get a massive move on the US, which means we might have a massive move on the indices in the inverse direction as well. So if we've had a big move and we've got a news event coming out half an hour after the open, the New York session might be a bit of a washout. So we'll see what happens, but I'll have a look at it. The CAD, obviously, be aware if you've got any Canadian dollar positions on at 1:30 this afternoon, there's a high chance we might get some ADRs across the CAD pairs. So either going to be taking some profit or you'll be getting some opportunities to scale in. So watch that one, and I'll be back at 2:20 this afternoon and back obviously tomorrow morning 7:50 for the same time for the DAX. So anything you need, let me know. Otherwise, I'll be back tomorrow if I don't see you this afternoon. So have a good day.